Okay, Nani, where were you last week? So one at last.
I was sick.
Oh, you are sick. No, you're doing FA?
Yeah.
Okay, now, Benita, good morning. Ibra, good morning. We have moved. 2 lessons we must have moved. We are doing the final accounts now. We had already done how to prepare final accounts. Now we want to proceed on. I think you stopped where you were doing the trial balance. So what are you going to do?
Will you be available to me?
Unless I confirm. I need to confirm. But meanwhile, you'll be able to catch up from. Okay. There'll be a gap, yes, I accept. There will be a gap because, of course, I cannot. Okay. There are some concepts that you need to know. But meanwhile, you'll be able to move on there. But yeah, of course, I know there is a gap. There is somewhere you'll not be able to connect completely. That is a fact. Okay, Ibrahim, I've seen. Okay, I'll record. There's no problem about that.
So do you have notes?
Hmm?
You have like a book vegetables. Maybe you don't have.
I see the problem is that the book is here. So I'll see the way to sort you out. Don't worry. I'll see the way to sort you out. Don't worry. So let's proceed on. Okay, you have then to leave some space or something like if you're using that small one, like 8 pages.
After spell balance,
After trial balance, we did how to prepare the final accounts. We also did another question on the trial about trial balance. So we did some 8 pages, approximately 8 pages for that. Two lessons is not something small, of course. We expect us to have. So, meanwhile, let's just proceed. You'll be able to. So you just we were just going to move on to the second illustration. We want to move on to another illustration. Okay, again, before we go to the past papers, let's have more one. So just right from where we stopped, adjustments to the final accounts. 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 Just 1 minute. So adjustments to the final accounts. Okay, I'm going to, for those who are online, the camera will be adjusted right now. So just write adjustments to the final accounts, then you write. Adjustments to the final accounts, then you write. Accounts of a sole trader when preparing the final accounts of a sole trader. The following adjustments should be made. The following adjustments should be made. The following adjustments should be made. Following adjustments should be made. Number one, accruals. Accruals, then an explanation to that. These are amounts of incomes and expenses. These are amounts of incomes and expenses which of incomes and expenses which have not yet been paid, or received, which has not yet been paid or received at the end of the year, which have not yet been received or paid as at the end of the year. Full stop. Accruals should be added, to the respective incomes or expenses. Accruals should be added to the respective incomes or expenses. Accruals should be added to the respective incomes or expenses, full stop. Accrued expenses should be treated, accrued expenses should be treated as current liabilities. Accrued expenses should be treated as current liabilities. In the statement of financial position. Should be treated as current liabilities in the statement of financial position. While accrued incomes while accrued incomes should be treated as current assets, while accrued incomes should be treated as current assets, full stop. Number 2 is called prepayments. Number 2, the second adjustment, is known as prepayments. These are items of incomes. These are items of incomes or expenses. These are items of incomes and expenses which have been paid in advance. Which have been paid in advance. Which have been paid in advance as at the end of the year. Which have been paid in advance as at the end of the year. Full stop. Repayments should be subtracted. Repayments should be subtracted from the respective incomes or expenses. Should be subtracted from the respective incomes or expenses. From the respective incomes or expenses. Full stop. Prepaid expenses. Prepaid expenses are treated as prepaid expenses are treated as current assets. Prepaid expenses are treated as current assets, while prepaid incomes, are treated as current liabilities, while prepaid incomes are treated as current liabilities in the statement of financial position. Are treated as current liabilities in the statement of financial position. Then from there, number 3 is allowance for doubtful debts. Allowance for doubtful debts. Number 3 is allowance for doubtful debts. Allowance for doubtful debts. Then you write, these are provisions. These are provisions. These are provisions. These are provisions for debtors. These are provisions for debtors who are likely not to pay their due debts. Who are likely not to pay their due debts. who are likely not to pay their due debts. Full stop. An allowance for doubtful debts. An allowance for doubtful debts should be treated as an expense. Should be treated as an expense. Should be treated as an expense in the statement of profit or loss. Should be treated as an expense in the statement of profit or loss. Stop. The amount of allowance, a paragraph below that, the amount of allowance at the end of the year, the amount of allowance at the end of the year should be treated, the amount of allowance at the end of the year should be treated, should be subtracted, should be subtracted from the statement of financial position, should be subtracted from the receivables, should be subtracted from the receivables, not from, should be subtracted from the receivables, should be subtracted from the receivables in the statement of financial position, should be subtracted from the receivables in the statement of financial position. I'll repeat, the amount of allowance at the end of the year should be subtracted from the receivables in the statement of financial position, full stop. The fourth adjustment, number 4, depreciation. Depreciation full stop. It refers to loss of value of non-current assets. It refers to loss of value of non-current assets. Full stop. It refers to loss of value of non-current assets. Full stop. It is treated as an expense. It is treated as an expense in the statement of profit or loss. It is treated as an expense in the statement of profit or loss. Full stop. It may be computed using either of the following 2 methods. It may be computed using either of the following 2 methods. Part A, straight line method. Straight line method, straight line method. Straight line method. In this case, the amount of depreciation, in this case, the amount of depreciation is based on the cost of the assets, is based on the cost of the assets. Full stop. The amount of depreciation, continuation, the amount of depreciation will be constant, the amount of depreciation will be constant. The amount of depreciation will be constant throughout the useful life of the assets. The amount of depreciation will be constant throughout the useful life of the assets. The amount of depreciation will be constant throughout the useful life of the asset. This means, okay, don't write this, but it implies, for example, if the cost of the asset, for example, let's talk of machinery, if the cost of machinery is 100,000, if the cost of machinery is 100,000, and we are using the rate of depreciation to be 20%. How much will be the depreciation for year one? If the cost of machinery is 100,000 and the rate of depreciation is 20%, so how much will be the depreciation for the first year? Calculator. Wacha nione watu hapa online. Yeah, Benita says it is 20,000, which is very true because it will be 20% of 100,000. Year one, the amount of depreciation will be 20% of 100,000, which is 20,000. The amount of depreciation, for example, for year two will still be 20% of 100,000, so it will still be 20,000. The amount of year three will still be 20% of 100,000, which is still 20,000. That's why we are saying, in this case, the amount of depreciation tends to be constant throughout. That is straight line method. That is how straight line method works. It is where depreciation is always based on the original cost of the assets. So that is straight line method. So the second method is reducing balance method. The second method is reducing balance method. In this case, the amount of depreciation, in this case, the amount of depreciation is based on the book value of the assets. The amount of depreciation is based on the book value of the assets. Book value. We'll stop. The amount of depreciation will keep on reducing, in the latter years. Will keep on reducing in the latter years. In the latter years of the useful life. In the latter years of the useful life of the asset. In the latter years of the useful life of the asset. So, tukitumia just the previous example, if the cost of machinery is 100,000 and the rate of depreciation is 20%, but this time using reducing balance method, how much will be the depreciation amount for year one? Depreciation for year one using reducing balance
Depreciation for year one will still be 20% of 100,000. But depreciation for year two, depreciation for the second year, somebody work it out.
Will it be 20% for 80,000?
Yeah, it will be 20% of the original 100,000 minus the depreciation of the first year, which was 20,000. So it will be 20% of 80,000. So how much will be the depreciation for the second year? How much? $16,000. How much will be the depreciation for year three?
Benita 64, no.
12,800. It will be 20% of 100,000. Sorry, 80,000, which was the book value last year, minus 16,000. So it will be 20% of 64. Okay, I get what you are saying, Benita. So it is like 12,800, and so on and so forth. So as you can see, depreciation tends to be higher in the early years of the asset, and it tends to reduce in the latter years. It keeps on reducing in the latter years, and so on and so forth. So it will keep on reducing, and therefore, unlike in straight line method, it is not constant. So that's all about depreciation. And therefore, we can straight away get to an illustration. So just write down below that illustration. Illustration. The following trial balance was extracted. The following trial balance was extracted from the records. Was extracted from the records of BD traders, for the year ended 31st March 2023. For the year ended 31st March 2023. So you write trial balance like that, having both the debit and the credit column. Debit, credit, trial balance, any details. Trial balance, having the debit and credit columns, and our figures will be in thousands. Our figures will be in thousands of shillings. Our figures will be in thousands of shillings. Our figures will be thousands of shillings. We are going to start. So if I say debit, you put it on the debit column. If I say credit, you put it on the credit column. So I want to start. I hope you're ready. Machinery at cost. Machinery at cost. machinery at cost, $600 on the debit side. Furniture and fittings, furniture at cost, just call it furniture at cost. $200 on the debit column. Furniture at cost, $200 on the debit column. Accumulated depreciation. Accumulated depreciation for machinery and for furniture. Accumulated depreciation for machinery and for furniture. For machinery, it is $150 on the credit side, and for furniture, it is $50 on the credit side. Then, accumulated depreciation, you put a dash, machinery $150 on the credit side, furniture $50 again on the credit side. Then from there, receivables $100 on the debit side. $100 on the debit side. Opening inventory $50 on the debit side. Opening inventory $50 on the debit side. Purchases $250 on the debit side. Purchases $250 on the debit side. Capital $800 on the credit side. Capital $800 on the credit side. Sales $500 on the credit side. $500 on the credit side. Sales $500 on the credit side. Payables $100 on the credit side. Payables $100 on the credit side. Drawings $150. Drawings $150 on the debit side. Drawings $150 on the debit side. I had said receivables to be 100 on the debit side, Bridget. Receivables, I had said 100. Okay, let's proceed. Salaries and wages, 30 on the debit side. Electricity, 20 on the debit side. Electricity, 20 on the debit side. Insurance, 32 on the debit side. 32 on the debit side. Bad debts, 18 on the debit side. 18 on the debit side. Cash at bank. 60 on the debit side. 60 on the debit side. Cash in hand, 40. Cash in hand, 40 on the debit side. Cash in hand, 40 on the debit side. Then discount allowed, 16 on the debit side. 16 on the debit side. Rent and rates, 34 on the debit side. 34 on the debit side. Debit. Then attempt to get for me the totals of both sides. Attempt to get for me the totals of both sides. I wouldn't have a without. Without. You know, I okay, crime. Bridget says that it is 1600 both sides. Confirm. Bridget says that it, yeah, even Benita says that it is 1600 both sides. Confirmed? So you just exchange the totals. Confirm the totals to be 1600 both sides. Okay. Then, after you've confirmed the totals to be 1600 both sides, you write below that additional information. Additional information. Additional information. Additional information. Number one, closing inventory. Closing inventory was valued at shillings 60,000. Closing inventory was valued at shillings 60,000. Number two, salaries and wages is accrued. Salaries and wages is accrued by shillings 15,000 while insurance has been prepaid by shillings 8,000. While insurance has been prepaid by shillings 8,000. Number 3. An allowance for doubtful debts of 5%. An allowance for doubtful debts of 5% is to be provided. An allowance for doubtful debts of 5% is to be provided. Number 4. Depreciation is to be provided for as follows. Depreciation is to be provided for as follows. Depreciation is to be provided for as follows. Machinery. 5% on cost. Furniture 10% on reducing balance method. Furniture 10% on reducing balance method. Furniture 10% on reducing balance method. Then required part A. Required, then you write below that part A. Statement of profit or loss. Statement of profit or loss for the year ended. Statement of profit or loss for the year ended 31st March 2023. 31st March 2023. Part B. Statement of financial position. Statement of financial position as at 31st March 2023. Then there solution. Solution. Before you show your solution, it is always advisable that you start by working out the workings. So the workings, you write below that, workings. You write below that, workings. Workings. The workings, you do them as per the way the additional information is provided. Okay, number 1 is about closing inventory. Number 1 is about closing inventory. That one does not require any working. Number 2 is about yes, salaries and wages have been adjusted. So workings. Salaries and wages. What was the old salaries and wages up there? In the trial balance, salaries and wages were reading 30,000, right? So 30,000, we are cutting off or escalating the zeros, so it's 30. We said that accruals are added. So it was accrued by how much? 18. 15. So our new salaries and wages will be 45. Our new salaries and wages will be 45. Our new salaries and wages will be 45. Then a continuation of the same, we have been told that rent and rates, insurance rather, sorry. Insurance had been prepaid by 8,000. How much was the rent, the insurance up there? 32. So insurance, that is our second working. Insurance, we should be having 32 minus 8, which I believe is 24. Which I believe should be 24. The third working. The third working is about what? Is about allowance for doubtful debts. Allowance for doubtful debts. Allowance for doubtful debts, we have been told that it should be created, or it is to be established at the rate of 5%. So it should be 5% of the receivables or the debtors. So it is 5% of, is it 100? The amount of receivables up there, it's 100,000. So 5% of 100, I believe it should give us 5. I believe it should give us 5. Yes?
When question about doubtful debts is going to affect the receivable.
Yes. Doubtful debts come from receivables because receivables are simply debtors. It is that portion of debtors that you are making an estimate that they may not pay, you may not recover from them. Then from there, number 4 is about depreciation. Depreciation. How much? Okay, on motor vehicles, it is on cost. The depreciation on motor vehicles is at cost. So, and the rate is it 5%? So 5% of the cost of motor vehicles. So it is 5% of the cost of motor vehicles was 600. So 5% of 600, again, I believe it is that 5% of 600, I want to believe that it is that. Then we have furniture. Furniture, the rate of depreciation. Furniture, the rate of depreciation is 10% on reducing balance. So it should be 10% of the book value. Book value is cost minus accumulated depreciation. Book value is cost minus accumulated depreciation. So we know the cost of furniture was 200 minus accumulated depreciation of 50. So it is simply 10% of 200 minus 50, which is 150. 10% of 150, I believe it should give us 15. I believe it should give us 15. Where? Accumulated depreciation on furniture, it has been given in the trial balance, just below where we have cost. Basically, that is how you go about the workings. So not unless you have a question, we'll now get straight away to preparing our financial statements. But unless you have an issue, we'll now just get to preparing our set of.
Excuse me, sir.
Yes, ask Benita.
What if we had machinery 5% on a reducing balance method? We would have used the accumulated depreciation for machinery, which is 150.
Yeah, of course, we would have done the same way we have done for furniture. We would have taken the cost minus the accumulated depreciation. Then you multiply by the rate.
Oh, okay.
Okay, if there is no other question, let's proceed on by preparing our final account. So you write the title. So the title is BD Traders. BD Traders. BD Traders. Statement of profit or loss. For the year ended 31st March 2023. For the year ended 31st March 2023. So we start with sales. Yes, sales. Ikran, sorry, Ikran. Ikran or Ikran? Ikran. Ikran. How much was the sale? 500,000. So you put 500 less cost of sales cost of sales, we have opening inventory. Yes, how much was the opening inventory? 50, right. $50. Then purchases, how much was it? $250. Higher. You add them together. Yes, 300. Less closing inventory. Less closing inventory according to additional information number 1, 60,000. This will give me 240. And therefore my gross profit will be, therefore my gross profit will be 260. In case we had something like discount received, it is added to the gross profit, discount received. In case we had discount received, it should be added. It should be added to the gross profit. Then expenses. It is wise to start with the ones that we have worked out for. The adjusted ones, the ones which have adjustments like salaries and wages. Not a must, but it is wise. So that we don't forget. Wages 45. Insurance 24. Allowance for doubtful debts 5. Allowance for doubtful debts 5. Depreciation for machinery and for furniture. For machinery, it was 30. For furniture, it was 15. Then from there, get back to the trial balance and identify any expense that you can see up there. What expense can you see up there? Yes. Discount allowed, how much was it? 60. What else? Electricity, how much? 20. Electricity 20. Rent, yes. Benita says rent, how much?
34.
34. Are we done? Bad debt is also an expense. Yes. How much?
18.
18. What else? Is there any other expense that you can identify? Drawings is not an expense, it's subtracted from capital. Any other? Okay, it seems no other, and therefore we can now get straight away to the totals. Having no any other expense, let's have our totals. Work out the totals very fast using your calculators. You. Yes. Yes. 207. Okay, 207 minor, I can say, yeah, also saying 207. So subtract the expenses from the incomes. So what will be our net profit? So subtract the gross profit, you minus the expenses, you come up with 53, which is our net profit. And that's all as far as the statement of profit or loss is concerned. As far as the statement of profit or loss is concerned, that's all. Ask.
I'm not understanding this one for depreciation.
What is the problem? I think one was using straight line, the other one was using reduced balance. And I think the one which was using straight line was machinery. That's why we took straight, the percentage you multiply with the cost straight. But for the second one, it was using reducing as per the additional information. Because according to the additional information, one was using cost straight line, the other one was using reducing. So the one that was using reducing, we had to subtract the accumulation. Yeah, it has to be it. But when you're using cost, it's not a matter you're providing the accumulation. So I want us now to get to the statement of financial position. And therefore, you will write the title which is BD Traders, BD Traders. Statement of financial position. Assets 31st March 2023. Again, our figures are in thousands. Again, our figures are in thousands. We will start with non-current assets. Non-current assets. Non-current assets, in this case, we've got machinery. These assets should be indicated at their book value. These assets should be indicated at their book values. And the book value is simply cost you less accumulated depreciation. It doesn't matter whether you are using straight line method or you're using reducing balance method. It doesn't matter which method you're using. So the cost of machinery is how much? The cost of machinery, I think it was, sorry, it was it motor vehicles or machinery? I think I changed the one. It was machinery. Sorry that I wrote motor vehicles. It's supposed to be machinery. Okay, the cost of machinery was 600. Minus accumulated depreciation. How much was the accumulated depreciation as per the trial balance? As per the trial balance, the accumulated depreciation of machinery was how much? 150. So minus 150 minus depreciation of the current year. Minus depreciation of the current year. How much was the depreciation of the current year? 30. So minus 30. So 600 minus 150 minus 30. So how much do you get? 420. Then we have furniture. You do likewise and get for me the value. Do likewise and get for me the value. Equal how much? 135. I think Grace said that. Grace, Gabby? 135. Yes, Bridget, 135. Yes, Benita 135. So in other words, it is simply 200 minus 50 minus 15. In case we have land and buildings, it still falls under this category. We would have put it here, but we don't have it in this case. So you get the totals of these two. This, I believe, is 555. Is 555. From there, we get to the current assets. We get to the current assets. Current assets, we have what? Current assets, we have something like what? Of course, for those who are not there in the previous class, in a grade, of course, I've given these formats for these things. Even the format for this one I've given. So it's something that. Okay, cash at bank, how much? Cash at bank, 60. Cash in hand, 40. What else? Inventory still falls in this category. And when I talk of inventory, I mean closing inventory, not open. Closing inventory. I mean closing inventory.
60.
How much was the closing inventory? 60. Higher. Receivables still fall in this category. Receivables still fall in this category. How much was it? 100 minus the allowance for doubtful debts. So it's 100 minus 5. 100 minus 5, which I believe is 95. One more item. With one more item which you have not yet put. Someone. Purchases. Where? Purchases hapana. Drawings haikuji hapo. Good, Bridget. You are right. Prepaid insurance. Prepaid. When we were writing about what are accruals and what are prepayments, when we were writing what are prepayments, there's something we wrote there. When we were writing something to do with prepayments, we said somewhere that prepaid expenses are treated as current assets in the statement of financial position. So prepaid insurance comes in this category. Prepaid insurance. Only the prepayments or the prepaid element. Only the prepaid, not the entire expense. Only this prepayment of it. Only the prepayment of it. So get for me the total current assets. Get for me the total current assets. Yes. 263. So add the 263 to the 345 so that we obtain our total assets. 880. $818. Then we write below that capital and liabilities. Capital and liabilities. We will start with capital. Yes, how much? 800. Add net profit. Net profit is the one that we obtained from the statement of profit or loss, which was 53. Which was 53. Then we less drawings. This is the point at which we adjust for drawings. We less drawings. In this case, we had drawings of how much were the drawings? 150. 100. Work it out. $700. Current liabilities. This is where we put payables. How much were the payables? 100. And then what else? What else? What else will appear there? Bridget says accrued salaries and wages. Correct. Accrued salaries and wages. Accrued salaries and wages. That is true. So accrued wages and salaries. How much were they? The accrual itself. The accrual itself, I can see it was 15. So 15. So the two current liabilities will be 150. And therefore, we get our total capital and liabilities by adding 703 to 115. 703 plus 115, which totals up to 818. And therefore, our balance sheet or the statement of financial position is duly balanced. Our statement of financial position is duly balanced. If you have a question, you can raise it.
If you've got a question, you can raise it now. Okay, Bridget, I've seen your question. Answer it. Answer it. Okay, Bridget is asking whether there is a scenario where you can have under or over provision of doubtful debts. She's asking whether there is a scenario we can have over or under provision for doubtful debts. What happens is not necessarily a provision, an over or under provision of doubtful debts, but what can happen is that sometimes you can be given a scenario whereby we have two provisions. Two provisions, I mean, in the trial balance, there is an allowance for doubtful debts, like in this one. And then in this case, we did not have allowance for doubtful debts in the trial balance. It was just in the additional information peke yake, si ndio? Kuna wakati unaweza kuwa up there in the trial balance, there is another provision. For example, assume in this case, in the trial balance, there was an allowance for doubtful debts of 2. 2, I mean 2,000. So how much would we have recognized in the statement of profit and loss, in the income statement? That is, supposing we had another allowance for doubtful debts up there of 2. Of course, when it is there, it is always on the credit side. You have an allowance for doubtful debts of 2 up there, and then the other information remains the same, such that once you compute down here, you get 5. So how much do you recognize as an expense in the statement of profit or loss? How much? Up there you have 2. Down there, after you calculate, you get 5. So how much are you going to recognize as a provision? Just very clear. Yes, Bridget? You have 2 in the trial balance, and once you compute the additional information, you get 5. So what do you do in such a case? Yes, Bridget. In that case, there was an under provision here, right? And therefore you only recognize 3,000. That is correct. So you get the difference. It means that they had under provided, they had got 2, but in the real sense it's supposed to be 5. So you recognize 3, the difference. Sometimes, and it should be treated, that 3 will be treated as an expense. The opposite can also be true. Up there, you have 5 in the trial balance. Below here, you have 2. In that case, they had over-provided. So in that case, the difference of 3 will be treated as an income. And it will therefore be added to the gross profits. It will be added, it is an income. Where you have your gross profit, you just add it there. So in case of you had under provided,
you recognize an expense of the difference. In case you had over provided, you recognize an income of the difference. Just that. Just that. So I want you to take out your past papers. Take out your past papers. Grace, do you have the past papers? How? I think they were sent to everybody. Hukuona? Kina Bridget, do you have the past papers? Anita, do you have past papers with you? Grace, hujaziona mahali? Yeah, what do you do? Bridget, do you have past papers? Okay, Bridget has them. For you, you can be going to May 2017, question 5. If you have the past papers with you, you can be going as I sort out those who don't have. Grace, umeziona? Umeziona? Okay. May 2017, question number 5. Sorry, question number 4, sorry. Question 4. May 2017, question 4. Benita, do you have past papers with you, Benita? Four. Bridget, let me know once you're there. Benita doesn't have. How comes? Kwani zilitumwa aje? You sure, Benita, you have checked properly? Because I believe it should have been sent to you. Grace, are you there? Si utumie mwenzako. Okay, I'm going to take you through the question so that I can leave it as an assignment to you so that if there is any issue, I can clarify it. We may not necessarily be able to do the question now, but I want to clear the air on any item which might not be clear. And I hope you the right question. It is reading who? Who is the proprietor of that business? Yeah, Joyce, yes. So the question 4, Bridget, it is question 4, not question 5. Question 4. The question reads, the following trial balance was extracted from the books of Joyce Mello as at 30th April 2017. You've been given opening inventory, purchases, returns, cash in hand, bank balance, buildings at cost, sundry expenses, stationery, legal fees, allowance for doubtful debts, trade receivables and payables, salaries, capital, selling and distribution cost, discount allowed and received, sales, equipment at cost, rates and insurance, returns in words, accumulated depreciation for both buildings and equipment. Additional information. Allowance for doubtful debts is to be increased to 5 million. Number 2, rates due as at 30th April 2017 amounted to 500,000. Due and accrued mean the same. Due and accrued. The examiner can use due, accrued, arrears, owing, all those being the same. Inventory as at 30th April 2017 was valued at 52 million. That is obvious closing. That is obviously closing inventory. Drawings amounting to 10,000 have been debited in the capital account. That was okay. There was nothing wrong with that. So that one has no adjustments, just vitisho to kelele hiyo. Depreciation is to be charged as follows: buildings 5%, and equipment 10%. Since the examiner has insisted that it is on cost, then it means straight away it is straight line method because it is the one which uses cost. Insurance amounting to 200,000 relates to the year ended 30th April 2018. That simply means it is a prepaid insurance. You are required to prepare an income statement. An income statement is the equivalent of statement of profit or loss. Okay, the word income statement is fading away. So these days we are using the term statement of profit or loss. So the word the term income statement is fading out. Then from there, statement of financial position. So if you have a question, you can raise it. You have any question? Raise any question. Utaifanya utaibalance. Okay. Online, do you have any question? Any clarification you would want me to make? If there is any clarification you want me to make before you attempt, I can make it now. But if there is no issue, you'll just attempt the question. And then we go over it tomorrow at 11, because I believe the next class should be tomorrow at 11. So if you don't have any question, you just stop at that. I leave you to do the assignment. We meet tomorrow at 11. And kindly make sure that you have attempted the assignment. Kindly make sure that by the time we will meet, you don't need to balance it. Even if it doesn't balance, it's not an issue. The issue is not balancing. The issue is attempting. So make sure that you attempt, so that once you'll be going through the question, you'll be able to understand what you may have missed. So let's stop at that. We meet tomorrow at 11:30. Sorry, 11, sorry. We meet tomorrow at 11. So let's stop.